Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then, Samir Kalra of Target Investing, Mayuresh Joshi of Angel Broking, he's running a little late, and Ritesh Ashar of KIFS TRADECAPITal joins us on the show. Thank you to all for joining me on the show. Today on Hot Money, we'll discuss the financial results that came out from Tata Motors. Canfin Home is down almost 50% from the recent highs. What should one do with it? Battery stocks seem to be buzzing. Lead has been down almost 20% in the recent time. What should one do on the battery stocks? And finally, what we'll talk about is we'll ask our guests for one top stock bet that they believe could help investors in the medium term. Let's start with the first stock, and that is pretty much the stock of the day, Tata Motors. The ADR ended down 6%. The stock seems to have recovered from the lows of the day, but nevertheless trading with a negative bias. JLR numbers really disappointed, while the domestic markets did well for Tata Motors. But how are our guests analyzing the numbers? What should one do with Tata Motors going ahead? We'll ask our guests. So, Ritesh, I'll start with you. You saw the numbers that came out after market hours. You have plenty of time to analyze the numbers. What's your first take on the numbers? How did you like it, or is there some issue?
See, if you look at it, the overall the stock and the counter has disappointed from last almost one quarter. The counter has moved from 332, had come down to almost 250, 255. And the result what I have declared yesterday, it is clearly denote the JLR numbers as disappointed because of the China import duties. Simultaneously, it has impacted to the Europe also, because in Europe the diesel engine has not supported well, and because of that reason the distributor has gotten 5% a lesser sales number in terms of cars. Okay. So that is also impacted in terms of distribution. But if you ask me, all this factor is already discounted. So if you look at it in the long-term perspective, no doubt it is a sentimental issue as of now, but domestic numbers are quite doing well. JLR numbers in terms of Europe, in terms of UK, what has impacted badly, it has now almost shortlisted. So over a long-term perspective, it is a good time to accumulate it.
Okay, good time to accumulate Tata Motors. We'll get to more details of the numbers in a while with Ritesh, but Samir, what did you make of the numbers?
So the numbers were average. If you take it through two separate ways, as you mentioned, the domestic did really well, as in that surprised us on the positive side, even if you take the normalized other income. And volumes and market shares are on a gaining pace, so we like that part. On the JLR front, as he mentioned, China, Europe, these were the worries. For us, the main worry is the cash flow generation. This quarter has been really drastically low. Domestically, they are planning to sell the Tata Tech and the Tata Motor Finance stakes, so I think that should help the debt to come out. So for us, the main concern now is the debt reduction. JLR is out of their control because there are more government-led policies right now impacting it. I think if they increase the cash flows, I think they'll have a better view, but it'll take 6 months to get it sorted.
Okay, so we'll discuss more in details about Tata Motors as of now. Samir, you're saying that the domestic business is improving, but almost 80-85% of the EBITDA for Tata Motors comes in only from JLR. So basically, Tata Motors, people don't much care about the domestic market that is moving. It's only JLR. And if that is facing severe headwinds, why should one buy Tata Motors?
See, the only point is, if you see maybe a year and a half prior, JLR was doing really well, right? That time the stock went up 600 in the anticipation that this continuity will be there for a while. Then all of a sudden volumes became flat. Now tariff issues have come in. So all of a sudden the stock went from 600 went to 250 now. Now when you take that fall, that accounts for the JLR to be taken as a hit for at least a couple of years. From my point of view, if it's any further downside, this is a positive from me, because we are actually holding Tata Motors, but that's at a very low percentage of our portfolio. We would like to add more percentages to the portfolio on this opportunity, and which we are. So I think the longer it stays up, I think somewhere the volumes will come into the base, maybe next year. So that kind of gives you a upside risk, which people don't account for.
Okay. Ritesh, what did you make of the management commentary? Quarter after quarter, Tata Motors management gives an optimistic guidance. Somehow they always fail. It's fallen from obviously 600 levels to 250. Every time everyone says this is the bottom for Tata Motors, but somehow it slips even further. What's your view on that and the valuation of Tata Motors?
So if you overall look at it, it was 333 when the Indico production has stopped, and all of a sudden the counter has fallen down to 300, right? The production of Indico in terms of domestic market, or rather JLR also in terms of US, China and UK, I don't think so it will impact much, because the counter has already corrected due to the guidance of the management have been clarified in quarter on quarter, as you rightly said. But I personally feel the way the sales numbers are improving in terms of China also, the import duties are expected to reduce with effect from the August. If this will be consideration in place, then automatically the sales number will comes into the picture. If you look at it, as I rightly said, the 5% of the car deliverables has delayed to the dealers, and because of that reason the sales number has also impacted. If you look at the yesterday performance, the sales numbers has dropped down only because of the supply chain was distracted. So I personally feel it is not a big deal as of now, but long-term perspective, the fundamental stories are going to be stronger in Tata Motors.
Okay, Mayuresh, we were just discussing Tata Motors. A quick word, what did you make of the numbers? Is the worst finally over? The street always believes the worst is over, but somehow Tata Motors proves everyone wrong.
Yeah, that is the case. Unfortunately, I think the JLR margin disappointed. I think the destocking effect and the import duties reduction had a huge play, because I think the restocking effect will not start coming into play. But I think the operating cash flows were negative. The working capital constraints, both on the standalone business and JLR, again impacted their overall performance. So a large element is that the restocking effect will obviously be seen in numbers, specifically in terms of volumes on the China front. The domestic business is still strong, but with the axle load norms, some softness is expected in the MHCV segment. So my personal opinion is that the stock might consolidate at lower levels. Maybe wait out for the domestic volumes on the MHCV side, see how the restocking numbers are playing out. There's also that diesel uncertainty in Europe, what happens with Brexit and the trade war fears in the US. So I think there are a lot of headwinds for Tata Motors.
Okay, so that's the view that we are getting in on Tata Motors. No doubt some of you guys do believe that it's a long-term hold, but as of short term, I think it's more of a wait and watch approach on Tata Motors. Let's move on to the next stock, and that is Canfin Homes. Numbers did disappoint, but if you take a look at what's happened recently, the stock has actually corrected more than 50% from the recent highs. It has been one of the marked outperformers as far as the last few years are concerned, but the fall has been massive. It's down 46% in the last 12 months. Is it the right time to start accumulating Canfin Homes? That's something that we're asking. Maresh, I'll start with you. What's gone wrong with Canfin? Would you accumulate at these levels?
No, so the numbers were very disappointing, Darshan. A large element in terms of all these housing finance companies, the cost curve has probably moved up because of the yield movement that you witnessed. At the same time, when you're probably talking about intense competition, specifically in the sub-segments that they work out of, I think there is fierce competition happening because everybody is chasing the same pedigree of investors. Having said that, I think the retail advances are still expected to grow at a fast clip. You're probably looking at the AUM growth also happening at a very reasonable pace. But my opinion is that let's wait for better numbers to come through. I think the stock, again, like Tata Motors, might consolidate at lower levels.
Okay, consolidation. Samir, what's gone wrong with Canfin Homes?
So, first of all, we've just started buying it. Two things which I saw in the results. One is the expansion. See what happens in NBFC companies until and unless you physically expand to a certain extent. Your growth and your concentration remains to a certain extent. This July, they expanded 10% of the branch expansion within 1 month. So I see that coming positive in the July, August, September motion. What negative came out here is the NPAs increased because of certain political issues which they factor to within Karnataka state, and that's where the majority of the system still is. And I think even if that gives you a point where certain stabilizations are kicking in, I think any kind of upside will help it out, and downsides are maybe another quarter or two away.
Okay, what about you, Ritesh? What do you make of Canfin Homes? Should you accumulate at these levels?
Yeah, definitely, because it is the first affordable housing finance company which is backed by the nationalized bank. So it is supported by the Canara Bank for this matter, and the overall portfolio is 70% of the total income is coming from the South India. The 50% fall is really visible due to two norms. One is the RERA, which has impacted the entire sector. The another part is due to the Karnataka election is also impacted in South India.
Okay.
So because of that reason, the stock has been corrected. But if you look at the balance sheet of the company, the profit margin has almost increased by 14% for this matter. The loan book is also grown by 34%, and 74% of the portfolio is the salaried income class. So in terms of numbers in terms of profit numbers also, it is really doing well. It is just like a short-term correction because of the RERA and because of this, and simultaneously the 33% of the incremental in terms of RERA norms. So I personally feel the stock is recommended at this point in time.
Okay, so that's the way two of our guests do believe that Can Fin Homes can be accumulated after a 50% fall. Samir, what sets apart Can Fin Homes from the others that you would buy it? Competition is not going down. There is more competition that's coming in. As he pointed out, yields are going up. That will put more pressure on the lending rates and all. Probably today with the rate hike, if that comes in. So what's working in its favor compared to others?
See, what happens, there are two triggers which at least we see. One is if you see the state population and the branches within that same state, Can Fin has the largest market share within that state. And the other companies are trying to enter it, but they are not able to break through as much as high. In the south, if you see the south part, the housing finance companies are very limited into certain sense. North, west, east is the more exposure to housing finance companies and more high competition what we talk about. Now what is happening in Can Fin, Canara Bank somewhere or the other has tried to sell it off. SGFC has shown an interest. So maybe that keeps a trigger on the sale. Maybe they want a better valuation out of the system. So they will be meant to feed this and show the growth and show the numbers much better ahead so that they can sell out the stake. Because I don't think so the bank, PSU Bank is wanting to manage it, but it's more of a valuation gap, and for that valuation gap they have to improve the operational issues. So I think that will be sorted, and the market share is quite enough for that state to be handled alone.
Okay, Mayuresh, Canara Bank wanted to sell Can Fin Homes. They said it actually failed. If the valuations are now almost 50% lower, if indeed this sale happens and let's say an HDFC or a Kotak or whoever it is can come in, does it mean that business will be re-rated for it? What happens in that scenario?
So I think let's not speculate who's going to come in and buy.
Whoever comes in.
So whoever comes and buys it, right? Obviously the ideology or the rationale is going to be to expand the loan book further, right? So if a big pedigree house or a big corporate house probably buys it, it also gives them the ammunition to probably go all out, because they have the balance sheet and the capital adequacy to probably support the kind of aggressive growth that one is looking at. But will that aggressive growth come at the expense of lower NIMs and what happens to asset quality in terms of aggressive loan expansion? I think these are some of the pointers that need still to be answered in a very tough and competitive environment. So again, I think the whole premise here is that yes, valuations are cheaper when you're talking about 6-9 months ago. But again, I'll still wait out.
Okay, you'll wait out. And Ritesh, very fast, what key triggers are you looking at? Same question, the competition is kicking in. Valuations now seem to be attractive, but what are the few key triggers that you like Can Fin Homes, in Can Fin Homes?
See, basically, if you look at the portfolio of this company, the 75%, as I rightly said, the 75% is salaried class.
Okay.
And because of that reason, the book value has been diversified. And the NBFC is all about the interest income, right? So if you look at the interest income, and simultaneously 33%, the government has also supported in Pradhan Mantri Yojana, wherein, FSI has also increased by 33%. So I personally feel the overall NBFC in terms of affordable housing finance and the real estate boom can be again come on track, and because of that reason the valuation of the company will be on the track. So I feel the 50% correction at that point in time, and in terms of profitable number and EBITDA margin what company has reported, it is a good call to buying at this price.
Okay, so that's the view that's coming in. Wait and watch approach is what Mayuresh has indicated, while the other two guests do believe that it's the right time to start accumulating Can Fin Homes. The next stock, it's not a stock, it's a sector that we want to talk it, but there are only two listed companies here, Amara Raja and Exide. But overall, there have been traction at it. Exide is trading at record highs currently. The results will be out today. The other trigger that worked in favor and Exide has actually massively outperformed Amara Raja, and the trend has reversed, is the fact that lead prices have come down almost 20% from the recent highs. Will this indicate that financials will get much better? Is this the right time to start accumulating battery stocks? We'll ask our guest So Ritesh, I'll start with you. Would you accumulate any of the battery stocks at this price?
Yes, definitely my bet will be on the Exide industry.
Okay.
The reason of the 20% lead has been the price of the lead has been fallen down, and when we are making the production of the battery, the 60% lead is required for this matter. When the price was high in the lead, in terms of the cost of the battery has been increased.
Sure.
Now the raw material price has fallen down. The cost what has increased in terms of selling of the product, it remains the same. So there will be a dual advantage in terms of the product price and simultaneously to reducing the raw material price. So overall it will be a double benefit in terms of the profit margin. So definitely I personally feel the reducing the raw material price will be a better benefit to the company.
Okay, better benefit. Samir, what's your view? Do you like any of the battery stocks?
So if you see the prices, April, May, June, the prices actually went up quarter on quarter, and then June, July, August, now they've started to come off. Now April, May, June will reflect in that quarter, and to certain extent in Q2. It always comes with the lag. So the prices, stock prices go up then and there itself.
Sure.
But it comes in a result lag. If I had to pick out of two, I think Amara will be my pick, because what has happened, capacity has come into play for two-wheelers for them. Market share was an issue because of the capacity constraint. So I think there will be a market share gain plus the benefit of the lead being low. So I think it'll be a better impact for Amara over at least a 9 to 12 months.
Okay, so Amara Raja is something that Samir says, and do you like the battery stocks? Do you think it's the right time to start accumulating?
I think it would make some sense to start accumulating on declines, because what you've probably seen in terms of lead prices actually going down, yes, I think it does give improvement in the margin profile. But there was absence of pricing power. So what you had actually seen over the last 4 or 5 years was that the pricing power was just not there with the battery makers. And that was where a massive dip in the ROCs also took place. Few battery makers are again expanding. So I think Exide is expanding its Haldia plant. They have invested 700 odd crores. They're also investing 700 crores into robotics technology. So what they're probably doing in terms of getting in new technology for solar, for telecom segments, because that is one key area which has been a laggard. Similarly for Amara Raja battery at this point of time. So they've expanded capacity on the two-wheeler to 14.5, expecting to take it to 25, overall 36 odd million. So the large part of their capex is probably in the price at this point of time, with margins expected to go up because of the pass-through effect in terms of the hikes that they've taken, and the raw material prices going down. They're not going to reduce their battery prices. So the average selling price for a battery, I mean, if you look at Exide's number, was close to 2,080 odd rupees with an EBITDA per battery of almost 280 rupees.
Yeah, so my point, we'll get into the discussion. Mayurish, in terms of what has Exide done right, because if you see what's happened over the last 12 months, Exide is up 25%, it's trading at record highs, while Amara Raja has not given any kind of return. So what is it that Amara Raja did wrong or Exide did right?
No, so Amara Raja was getting market share gains more in terms of the replacement market. Exide was clearly lagging behind, both in terms of a margin profile. Because you look at the EBITDA margins, Amara Raja is still maintaining a 14 to 16% band. Exide had reported margins of 13.7, which can very well expand going forward. You're also seeing them taking off their non-OEM profitable businesses. So they are now very, very focused in terms of margins at this point of time, rather than chasing clients. The other element also in terms of what had gone wrong in terms of the industrial part of their business, there you're seeing pickup happening both on the inverter side, the UPS side, as well as the telecom part of the business. And again, rationalization. So I think the cost optimizations that they're probably doing in terms of other expenses are also expected to bear fruit. So I think all these efforts are probably going to take the stock in the right direction going forward. Amara had a benefit because I think the growth patterns that they displayed 3-4 years prior to this year, I think were phenomenal compared to Exide. But I think the underperformance has been pretty stark for Amara.
So among the two, which is a better bet at this point of time?
So I think Exide is something that can still do reasonably better in my opinion. More to do in terms of the leadership position in OEMs that it has. The replacement market is also somewhere where the focus of the management is very, very clear at this point of time. And there is clear scope of margin expansion. So I think Amara's margin might get constrained between 14.5%, 15%. If a 125, 150 bips hike happens on Exide's margins, you're probably going to see more leverage play out on the balance sheet.
Okay, Ritesh, you said that you prefer Exide. Any view on Amara Raja? Would you, if you like the battery space, would you like that, or would you stick to Exide?
I will stick to Exide.
Any reason for not liking Amara Raja?
Not really like that way, but basically the product innovation towards the Exide are shifting towards the electrifying battery, which is a theme of the government, and government is also supporting towards the electronic car by 2030. So Exide Industries also started initiative in this new product, wherein electronic car will be supported that aspect. So the innovation of the product and the diversification in the new challenges and the demand of the market, I feel the Exide will be a much more stronger and the leader in the industry.
Okay, some concerns were raised on Amara Raja. Do you believe that that will be overcome, and what triggers will Amara Raja have for a better growth prospect than Exide?
See what happened if you see 2011, 12, 13, 14. Amara Raja excelled Exide, because what happened over there that Exide didn't have the capacity to increase the market share in the replacement side, and Amara Raja was sitting on the new and free capacity. So they were able to gain market share for those 3 years, and Exide was either stable or losing in certain segments. The reverse happened after 2014, for 2015 onwards, because Amara Raja capacity came to 85-90%, and you take at least 18 to 24 months for setting up such a capacity. And they were going really big. So this two-wheeler capacity now has increased their production capacity by 45%. So that gives a big edge to them now. And now when the demand comes in, the spare capacity will always help you out. So I think in next 6 months or 9 months, I see the transition now changing to Amara.
Okay, so that's the view that's coming in on the two-wheeler space. Also, Exide will come out with numbers, so you'll get a better sense of how this industry is moving in trade. And finally, the last stock we want to talk about is we're asking a stock recommendation which can be accumulated at least for the medium term. So Ritesh, which stock do you like if you want to suggest for our viewers?
So if you look at it, the medium term, there will be some factor of technical as well as the fundamental.
Yeah, sure.
So it is a techno funda call. So if you look at it, the relative rotation graph, so after ITC, pharma and consumption, I personally feel the energy segment is going to be a next boom in terms of diversification in terms of sector wise. So my bet will be more on the Tata Power.
Okay.
The Tata Power is a company who has reported 16% of the profit. In terms of PAT margin is also 328%. Simultaneously, if you look at the asset quality in terms of land valuation, it is fantastic. Simultaneously, company is looking forward for 43.86 billion to share to the Tatas and to just reduce the debt by 10%. So the restructuring in the company at the current point in time, it is going in a very structured manner.
Okay.
So I personally feel that the current market price is a fair value for the Tata Power.
Okay, and how much potential upside do you see as per your calculations?
I personally feel 20% appreciation can really expect it from the current price.
Okay, Mayuresh, any stock that looks attractive?
Yeah, so Capacite Infra Projects is something which looks interesting at this point of time. Strong order book, 5,800 odd crores. They probably cater to the gated community, the high-rise segment. What you've probably seen in terms of the financials, they had a 55% top line growth, more than 100% bottom line. But if you are normalizing our expectations over the next 2 to 3 years, so even if you assume a 25% top line growth, a 60% bottom line growth with margins expanding to 16.5 odd percent, I think the return ratios will automatically jump up substantially. So they are expected to have ROCs of almost 20 odd percent in our expectation over the next 2 years. The developers that they probably work with, I think there is sufficient amount of evidence that the revenue visibility will still get maintained. The receivables book also is not too intense. So in that sense, again, from a valuation perspective, my own sense is Capacite Infra Projects on decline season.
Over the last few months, the counter has corrected significantly. Any concerns that the market had? I think it was down some 20-25% from the recent highs. Any concerns on Capacite that the street has?
I think the genuine concerns were related to the real estate developers itself, whether the inventory is going to move, if the inventory is not going to move, what probably happens in terms of the payments that they will probably give out or meet out. But with the FSI regulations also changed, both in terms of central and south Mumbai as well as suburbs, and the traction that we've had and the discussions that we had probably with a lot of managements, I think there is no inherent slowdown that we are probably witnessing in terms of the development of the projects. So he's more concerned with the development of the projects which are probably happening on stream. You might have some amount of lag in terms of the receivables being a little bit delayed, but I think that's well encapsulated in the fall that we'll probably see.
Okay, so that's the view on Capacite Infra, and which one, Sameer, do you like?
So I think Sun Pharma is a stock which this quarter is important for them. So I think if the estimates are in line or below, you might see a correction because of the run-up through Halol has come in.
Okay.
So that might be an opportunity to add or start buying over there, because I think this will be more like a disappointment on a shorter term sense of it. But if you see the run up and the approvals now kicking in and the launches getting speed up, so I think now onwards another 6 months or 9 months this gets sorted
But isn't
out.
it factored in? Because
No, that's what I'm saying. So the run up, because of the news, might be factored in, but because of the numbers, it cannot be factored in because numbers have to start come.
okay.
And they were at a 12% production revenues at a certain point of time, and I think now the base has gone up. So I think this will be a game changer for them. In terms of a stock price, it might be factored in for the shorter term until and unless the numbers start to come in from a September quarter onwards.
And what about the specialty pipeline? When do you see that actually kicking
So
in? Because that probably
yeah.
will be the next trigger.
So that might come in a substantial way into 9 to 12 months because the launches happened 2 years back in starting of it, and there are certain acquisitions on the derma side which they did. So these will play out in next 9 months. So I think the downside risk has somehow gotten out of the system
okay.
because of the US FDA, even throughout the India, if you see, has taken now a changing stance towards giving much more approvals into the system. So I think this will change in the next 9 to 12 months for Sun Pharma, and this quarter can be a changer for them.
Okay, so that's the view that's coming in. Capacite Infra is something that Mayuresh likes. Sun Pharma is something that Samir likes, and Tata Power is something that Ritesh likes. With that, we are completely timed out on today's Hot Money. Mayuresh, thanks so much for coming in. Ritesh, thank you so much. And Samir, thanks so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.